Running yours.
Well, what week are we on? 11? 10? 11?
11. 10 or 11.
Welcome to week 10 or 11.
Or 11.
You ready?
Yeah, ready, you're right.
I'm just not going to say the week.
Okay.
Ready?
Yeah.
Yes, guys, welcome back to another week of the week's roundup. I am not too sure what week we're on.
It's 10 or 11.
It's 10. Okay, welcome back to either 10 or 11.
10 or 11.
You'll find out after when we'll put the title on the
Put the
episode.
thumbnail on. You got it.
Yep. Another big week, as we say every week nowadays.
Yeah, well, this we were just talking about in the car, innit?
That's what I mean. We've had, obviously, as you can see on your screen, guys, as we were speaking about last week's episode, the Fed were obviously due to give us the latest hikes. We all knew it was going to be a hike. We thought it would be 50 basis points. But after the CPI reads on Friday last week, everyone was people were even banking on a complete 1% increase. Which wasn't really like a bad call, if I'm honest with you, because it's just obviously a lot higher than everyone expected.
Yeah.
But yeah, and the market's been bleeding.
Heavy.
One thing I'm really struggling to like comprehend is that I'm surprised all this stuff hasn't been priced in yet. But maybe people did actually anticipate a fall or a slight decrease in CPI reads, maybe.
Yeah, I think that's caught people off guard a little bit. I also think that I think the interest rate hikes have been priced in, or they were priced in.
Yeah.
But now people are just losing faith in general. They're just like, I don't really know.
Bit of a domino effect.
And like kind of people are like, maybe it's not priced in. Do you know what I mean?
That's what I mean. I mean, we've not actually got it on the tab, but we should have got it up. But the fear and greed index is at 7.
Yeah, let's get it up,
It's at
because
7.
it's actually mad.
I cannot believe I'm saying that. You know, when it was at 11, at that point, I thought surely it's not getting any lower.
Yeah, I know.
I've not seen it at 7 before. This is the first time I've been in the market. It's been 7. Has it ever been 7 before? There's a chance it could have been.
I haven't seen it.
There's a chance it could have never been 7 before. I could be wrong, but
7 yesterday, 7 again today.
Last month 8.
And then these, we were talking about this earlier, weren't we?
Yeah.
These clusters.
Yeah. So it's a good job you got this up actually.
So this is 2018. This is the crash in 2018 when we got a big cluster. It marked the bottom of the crypto chart.
Yeah, this is this discussion we were having earlier. We were trying to like relate this to.
Actually, should we come back? We'll come back to that at the end because we're going to talk about.
Okay, we'll leave that there. But yeah, obviously, fear and greediness is in the mud.
Yes, so.
And then you add this on top of it, it just kind of makes everyone lose faith that one bit more. But like, it's almost like we've been expecting this now. So it's not like, oh no, 75 basis points. I didn't expect that.
Yeah.
Even last week we was expecting 50 basis points. I don't think it would have been a bad shot if someone said, okay, I wouldn't be surprised if after the CPI reads they do go 75 basis points.
They've got to get ahead of inflation. They've got to get ahead of it.
They've been behind for so long. They have to get ahead, like you said. But the next one is in July, I think. So we only have to wait just slightly over a month in terms of getting their next call on it. I guess we'll know when the next CPI reads.
It's getting they're playing a dangerous game now. Like I know why they've done it. They needed to do it. I am a big fan of like their aggressive like rate hikes because I think it needs to happen. But at the same time, they've kind of waited too long, and now things are already breaking, and now they're hiking into the break, and it's kind of like people say, oh yeah, they're not going to change until something does break in the system, and I feel like you're pretty close. You're pretty close.
I just don't get why they've obviously it's all good saying it now in hindsight, but I feel like a lot of big investors, but especially when you watch old YouTube videos now, when they were really heavy on quantitative easing, a lot of people saying that the only thing that's going to follow this is inflation. Yeah. So if they could have read it, I'm sure they knew, or maybe they just didn't know. I feel blind-eyed by it, but
it's a bit like when Christine Lagarde, when she was on that interview. Have you seen the interview where she's like in front of loads of people and they show the balance sheet of the European Central Bank and they're like, "Oh, look at this! It looked like you're talking about crypto being a bubble. This looks like a bubble."
Yeah.
And she makes the point of like, "Well, that's all we could do. Like, what else could we do?"
It is true. But like you said, I think they potentially. Like I said, it's all good looking back at it now, but I think they potentially could have done it slightly earlier.
Yeah, I think they should. That's where they got it wrong. I think they didn't have much choice with quantitative easing.
No,
but they should have just come straight through and been aggressive.
Yeah, what they did with that was, like you said, they only had one hand to play there, so they had to do that. There was no other way of getting around it. But I think in terms of like, if they planned that they were going to do that, they should have known the repercussions that would have, and they should have probably maybe like drawn out a bit of a timeline in terms of like when inflation hits this amount, which we expect, we'll put our basis points up like this. But this kind of perfectly illustrates the fact that they're still looking at data and they're kind of acting accordingly to that. because obviously everyone was under the assumption that it was going to be 50 basis points based on maybe like a similar CPI rate or decrease.
Yeah.
But no one saw the increase, but they should have planned for it. Maybe they're lagging behind. That's what I'm trying to say.
Yeah, but they're reactionary rather than like what was.
Yeah, I don't know what the other one is, but I know exactly what you're trying to say.
Like they're reacting to what's happening rather than like making.
I mean, listen, it's hard regardless. Like anyone navigating this right now, especially what these guys are doing, I take my hat off to them because.
Oh yeah,
it's hard work.
Easy job,
it's hard work. Like trying to control everything that's going on right now and trying to stop the world going into recession. Not just, not just talking like UK, US. I'm talking the whole world. It's about to go down the pan.
And like we talked about this in the car, and I feel like we're on this topic for a while, but we talked about this in the car. It's like people don't understand what this means.
Yeah, so like what Will was saying in the car was like, people here, okay, and I've heard a lot of people actually speaking about it now in public.
Yeah.
But like, it's still your point does come through. Like, people here, okay, look, interest rates have gone up.
Yeah.
But they're like, okay, it's a bad thing. They know it's a bad thing, but they don't actually know what repercussions it has and like where it's actually going in terms of like, okay, it's gone up now this month, but it's going to go up next month, and it's gone up more for this month for obviously the US, UK, it's still going up.
Yeah, and it's the rate at which it's increasing as well. Because if you think that like it's a 75 basis point hike, before that, what were they at?
Was it 50 before? Was it?
Yeah, but what was the actual interest rate in the US? Maybe 0.75 anyway. So they've just gone. It's gone up 100% in a month.
Yeah, that's good.
And that's enough to like if you think that you're a company, and you have any kind of loan or finance things, and you have to refinance. Yeah. If you're already struggling from COVID and you refinance, let's say you're a big company and you refinance in 100 million, that could be another $750,000.
That's a great
$750,000 a year that you've got to pay just in interest to refinance your loan.
That's bang on. I think that's the point that you're trying to make there, because like it's 100% people that actually they just hear interest rates have gone up. It's a bad thing. We should probably spend less. But if they knew, okay, look, it's gone up 100%. If you said that to someone, I think it would inject a lot more fear into them. So like,
yeah, and it affects a lot to do with this. Is why you see like equity selling off. It affects it in so many ways. So that's one way. So if a lot of companies are struggling anyway, COVID's not been good for most companies, and we've had free money basically before that. So everyone's in the mindset of you can just borrow money and it's free, and then now all of a sudden it's 100% more expensive in 1 month. So that's the first way it affects it. We're already down. We just looked earlier, like 22 to 25% on the S&P. If we come down like to 50%, that's people's pensions like getting liquidated. And
spell disaster.
It's absolute disaster. So that's another way where it affects it. It just puts pressure on like the economy in general. It's not as easy as being like, like interest rates are going up, so it's harder for me to borrow money. And we're getting on to the next point in a second. We're going to talk about something about that. But like, also another thing to throw into that consideration is like, America now have a 30 trillion or $33 trillion debt, and they're going to be paying 1.5% APY or yearly interest rates now. Not APY, but yearly interest rates on 33 trillion just to be able to finance their interest crazy. Is going to cost them like what, 300 mil? Is that? Was it 3 billion? 300 billion? I don't know.
Something like that.
It's a lot of money.
And regardless, it's a lot, and it's crazy. It's crazy times. There's obviously other points in here. I don't know if it is the next point.
Oh yeah, and actually one more point that actually means is that you're not going to increase GDP easily in countries, because anyone trying to IPO is going to find it a lot harder to IPO, because most people that IPO go to different finance companies for loans, and valuations of companies are based on like their profit times by a certain factor, a certain amount, like let's say it's 200%, 300%, 400%, but that's depending on a lot of things. And one of the things to take into consideration is how easy it is for them to borrow money. If they're like a tech company and they want to expand at a certain rate, let's say they want to expand at like 100 million a year, but they'll need like 50 million loan for that. If they can't get that loan for under 1%, and that might mean that they can't hire the right amount of staff for them to then do that. Yeah. And a lot of these valuations of companies, so people keep asking me, and I'm making this point specifically because a lot of people are asking me, am I buying the private equity for Ripple and Link2? No, I'm not, because the valuations of Ripple, I think, are $12 to $14 billion as a company, but those valuations were done before the interest rates for like borrowing were up to 1.5%. If they were done 2 months ago, the interest rates were probably at 0.5%, and now you've gone a whole percent higher in a month. that massively brings down the valuation of that company, meaning that if they do then IPO, the valuation that if it still takes that same valuation, it will dump on sale because
It's inflated.
yeah, clever investors and people who understand how to value companies properly, they are going to be like, well, it's overvalued in terms of what the company should be worth with the models that we have to project the valuation of a company going forward. So they will not, they will sell. They'll be like, okay, well, that's too much. And that's why I haven't personally bought any Ripple shares. But I wanted to bring that in because a lot of people do ask me that.
Yeah, no, but I think that's a good way to explain what you were trying to say earlier in terms of like people don't actually understand what this means, like interest rates going up by X amount of percentage, because like I said, they just hear that it's gone up, but it has a big snowball effect in terms of how it affects companies' valuation if they want to IPO.
Yeah.
It affects everything.
Everything
About the economy.
Yeah, growth, like
it just has massive detrimental effects in terms of increasing the rates. But like I said, it's like they're almost been backed into a corner by themselves.
They don't have a lot of choice, and I'm not blaming them. I'm just saying that it's more complicated than what people think.
Yeah, like people really find it easy to sit there and like kind of throw abuse at their way, but like, what would you have done?
Yeah,
what would you have done?
It's that, or you've got people who, well, what is it, like 85% of Americans live check by check, and if it's 8% more expensive a month and you already live in check by check, you've got to find 8% extra a year from your paycheck to be able to even live.
It's crazy. And something else that's going to not help the Americans.
This one's mad, but we spoke to my mum about it and she doesn't think it's that mad, but I think this is pretty mad.
They've lived through crazy times, which I don't think we're too far away from, honestly. No. But the mortgage rate hit 6.28% here in America the other day. And as you can see from the chart, which is on your screen, a week ago it was at 5.5%. I don't know if it was 5.5, but even before that, if you look at months down the line, in terms of how much this increased in the short time space, it actually has done it.
14% up in a week.
It's crazy. So couple that with inflation, couple that with the interest rate issue. It's like every aspect of people's savings, the way that people make wealth and people spend their money, is being affected by all these rates going up.
Yeah, and I don't want to be this guy, but like that spells to me like housing market crashes on the way.
It kind of rings. Obviously, we weren't really like in the space. Obviously, we were quite young anyway when 2008 happened. But like, I'm sure a lot of the older like generation who are investors who are keep up to date with economic news can kind of like hear the same similarities going on. Like it's
got to be close. It like even if it's not the same like as what they had like synthetics and all these like swaps and what did they have that crashed the market in the end. Loads of different leverage people basically had on people paying their mortgages. But this time, what I feel like's happened is the cash in the economy is inflated, which has inflated the pricing of things. Because everyone's then also got used to borrowed more than what they can afford, and then now all of a sudden everything that you're borrowing is they're like an extra 2.5% more expensive in a week or whatever that is. So, like if you're leveraged up to the eyeballs with your debt, you take on which people even do that we know, like you take on more debt to basically service your old debt, take another credit card, and all of a sudden each of these debts is getting 2.5% more expensive. What do you do? Well, that's when you start to see repossessions. You start to see people going to lose houses, people going to lose cars.
Yeah,
and I think that's what's coming, and I think that's coming quick because it's showing you.
If it carries on at this rate, I think we'll be seeing it in no time. Like, obviously, you don't want to be spreading like negative news, but like at the end of the day, the sad fact is it's facts in terms of everything's going up. Everything's really hawkish at the moment. There's no positive news coming out in terms of like interest rates or any rates of inflation. Nothing's like seems to be getting better, and it kind of does draw into the narrative that everyone's kind of painting at the moment that everything's going to be going down to the back end of this year as well. Like it's hard to argue with the bears at the moment.
Yeah,
and that's why sentiment's low. But like it depends how you think, because obviously I know some people.
Yeah, I just want to clarify something quickly before you go on. This is just to do with the wider economy. Because I want to personally remove crypto from this conversation, which we'll talk about.
Yeah, that's what I was about to say. Like, we'll go on to that because we've had discussions off camera why crypto could potentially decouple. Again, nothing hopium wise. It's just a potential. Because obviously, like crypto's never been around when there's been a recession. So like
and the point that we made is that Bitcoin specifically was created at the back of the last crash, at the back of the 2008 into 2009 was when the white paper was released for Bitcoin. So it was created because of this issue. Right, yes, we know that the minute it's acting like a risk on, so you would presume that it may follow what equities are doing and other risk on assets, of course, but we don't know. We don't know. It's following that at the minute, but if it's created for this exact reason, at some point, in my opinion, it would probably, if it's going to solve this problem, then it should be, people may or may not look towards it, but I don't want to put it in the same boat, but I also don't want to write it off. People just automatically presume that if the wider economy is bearish, then that's what cryptocurrency is going to be, and they say, oh yeah, but Bitcoin's cyclical, but we've never been in a monetary position as we are right now. Yeah, exactly. So if that's the point, that we've never been in that position, how can you just presume that it's going to be bad?
Yeah.
Like, I feel like it's easy to do that because of sentiment, and
Yeah,
like we've
literally,
been
that's
getting
what it
beat
is.
up. So
Sentiment's low, so people's automatic reactions to kind of think bearish at the moment.
yeah, exactly. And I'm not saying it's not. I'm not saying it's not going to go down. We don't know. I'm saying that I don't know that. Like, it looks like it's going to go down, but I also a lot of the indicators look like it might have bottomed, which we can talk about at the end.
Yeah,
but
that's there's I guess we'll go into it at the end, but like there's a lot of narratives, a lot of TA, a lot of everything going on which support both cases of the coin right now. If
yeah,
that's the best way to say it.
my main argument is that a lot of people are completely like one way. They're completely saying like it's there, it's just obviously going to happen. And I think that if you can have complete certainty in one direction, then you just don't take everything into consideration, because I don't think you can be certain right now. And people say like, oh, you're an idiot if you're buying. Like, I'm going to wait for the Fed to pivot before I buy. And how do you know? How do you know if the Fed pivot in is going to be the factor that's going to kick the market off? How do we know that in a market that's completely speculative, that we aren't going to get some sort of utility run? How do we know that this isn't going to be something that's going to solve at least a fraction of this problem that we're getting ourselves into at the minute? We don't know that.
Nobody knows.
But
I think no one knows what's going on in terms of anything. So if you, like you said, if you're saying it with conviction right now, I'm not too sure what you're really thinking, if I'm honest with you.
I think
it was
I can't see it.
Well, the story is, guys, I'm sure you've obviously heard of it, which didn't start, but it was just another catalyst in terms of bringing the market down this week. There's been a lot of negative news, hasn't it, in terms of like obviously hikes. We got obviously CPI reads on Friday, and then this happened with Celsius. I can't remember, we won't be able to find it now, but where is it? I don't know. It was around here somewhere.
Basically, Celsius are in the muck. They're
not really doing too well at the moment.
They might have had $13 billion under management, maybe more, I can't remember, but they've essentially stopped their own customers from withdrawing capital, and they're also making their own customers pay collateral on loans on their site, which they may never be able to withdraw if they want to ever have the potential to see their collateral again. Like, so it's a sticky one, mate.
It's another company doing bad things, especially on the back of what happened with UST.
Yeah.
Celsius now obviously are doing this. It just brings another negative story to the space. Further dampens sentiment again.
DeFi.
People losing trust into DeFi specifically by the day. Story after story keeps coming out, and like it's easy. Things like this are easy to happen with everything that's going on right now.
Yeah.
But obviously these guys have actually just made just a massive mess up.
What I'd like to say, like to start with, you could some of the things they did in the first place, like we talked about this in the car, and it's a bit complex to get into, so I'm not going to do it right now. But I'd like to say to start with that you could have said, oh, it was just like accidental on their part, and they just got caught out. But then now I think that what they're doing is almost
it's self-inflicted.
Fraudulent now.
It's self-inflicted, and like they've done it not on purpose, but like it's just you've got people like BitBoy suing them, and rightly so. Like I was saying to you in the car, whether obviously I don't know what they're going to pay him in if he wins the lawsuit, because they're going down the drain. Well, that's what it looks like so far, anyway. But you've got furious people now, because it's like it's almost what they've done is. It's almost, like you said, you could take them to court. It's that big of an issue.
They've basically got a leverage trade on.
Yeah.
And because they're going to get margin called in the leverage trade, all the money that you keep putting in to pay back your loan collateral, they're putting into the leverage position they've got to bring the margin down. But that's just like a never-ending cycle, because this Bitcoin price, it's on Bitcoin, it's like 243 mil or something like that. But like as long as that's one of the things. They've done something else as well, but I can't be bothered to get into it because it's so long. There are threads out there, and I've retweeted one about it if you want to read into it. But like if the price of Bitcoin keeps coming down, they're going to have to keep getting collateral to post so they don't get liquidated.
Yeah.
And so if you keep paying your loan back, they're basically using that as collateral to post.
Bring down that margin.
Yeah, to bring their margin call down. So it's like, it's a game of cat and mouse. And like, it could work, but at the same time, they're YOLOing your funds.
Yeah.
Like, and you haven't taken that risk. They're the ones who have
That's what I'm
taken
saying.
it.
It's a lose-lose for the consumers at the moment, and this is exactly why we need that sense of regulation.
Yeah,
in
we do.
space. This
We
is
do.
this is literally why I'm saying. Obviously, like we've said it for several weeks now, that the space needs regulation because we can't live in a world where there's zero regulation because things like this are going to happen.
Because people get greedy.
And people get greedy. People are obviously going to start making mistakes. What these guys have done, and the consumer is left in a bad spot. They can't do anything. It's a lose-lose for them.
Both the consumer and Celsius are greedy, and I'm not calling any consumer out because I've looked into Celsius. I had them written on my board as someone to check out properly. I never actually got round to it, but it's only through Look. It's only through Look that I use Nexo instead of Celsius. Celsius has been around since 2017. Like, I remember them being around back in the day. So it is greed, though, because you chase high percentages and you don't read through the paperwork properly. But why would you if you're new to the space and everything anyway? So it's tough. It's a tough one. And it's a field day for regulators, isn't it? Gary Gensler and Elizabeth Warren must be sitting there just like absolutely laughing.
And rightly so, though. It's a bit embarrassing, like stuff like this keeps happening, and like it's just almost like one thing after another with the price action right now, the sentiment right now. It's
a hard one because like if you're seeing all this in the general markets or the economy in general, you've got no investment option there. Like, what can you do in legacy finance now? How can you earn money? You can't.
You can't really.
So people look to more risky assets like this, and then things like this start happening, and it's like
it kind of stops the decoupling thing that we're kind of talking about, whether it's bottomed or not. But it does kind of stop that people having the thought of, okay, you know what? In fact, the stock market's going down. I want to go to crypto because it's a completely different thing. But is it when the things like this coming out? Who knows?
It's just not good. I don't like to see anyone losing money though. So if anyone who's losing money in this, it's not really their fault. Like I'm not blaming anyone because who reads through the T's and C's? No, like you don't. Not like really. Even I do actually, but like I'm probably an exception. But
that's what 97%.
Yeah, and they shouldn't have to.
I'll tell you now.
If you're advertising that you can offer someone a return on a company that's managing like 1.8 million people's money, you should be able to guarantee that.
Yeah, you expect that because you've expected that from the traditional finance kind of options we've got in like our parents' generation. But when crypto comes along and these other new companies come up offering it, you assume that they're going to offer the same kind of
security basically.
As they did, but obviously not because we need regulation. We do need it. I don't care what anyone says. We need it.
And it's also going to bring a lot of legacy finance money into the space when we get regulation as well. Yeah.
To me, it's the win-win. It needs to happen. At least some sort of regulation anyway. Like it can't continue the way it is. If we continue like the way it is, the next time we go in a bear market, the exact same thing is going to happen. Companies are going to get in trouble, and it's just going to be, like I said, a snowball effect. And consumers going to get hurt. We don't want consumers getting hurt. Like as bad as it sounds, like you don't want them to get hurt.
Because this is a sick, like new technology, and it is going to affect a lot of our financial system in the future. In my opinion, like when you see people who come into the space, want to learn about it, they're looking for somewhere to try and make some percentages on their money, and then they get burned like this, they're not going to come back. No. So that's where I think it's sad. That's up a bit, because I opened a secondary tab. By the way, sorry if you can hear a dog barking outside. I've got the window open. It's roasting here in the UK
it's
today.
So hot, guys. I am struggling with hay fever right here. It's so bad.
This is the first piece, anyway. Do you want
to? We're not used to this sun. But yeah, moving on to XRP news now. And we've got this. The court orders the SEC to provide the court by June 16th, which is today, 10 additional documents for the in-camera review to assist the court with the decision with the SEC claims of attorney-client privilege. Obviously, to do with the Hinman emails. The judge, correct me if I'm wrong, because Will was just talking me through it before. The judge has already seen 10 emails, but she's asked for a further 10 to look into.
To the 58 email chain.
To the 58 emails, which she's now basically going to have access. So the SEC do get to pick and choose what emails they're showing. Mm-hmm. But like you said earlier, we feel like she's kind of made her decision. She's just asking for a bit more evidence, basically.
It's basically because
to support her, whatever she's going to come out and claim.
Yeah, exactly. It's because in court, the SEC's attorney kept saying, oh, but you don't know what else is in there if you don't read the next 10.
Yeah.
So that's all the SEC lawyer kept saying. So she's basically like, look, okay, send me 10 more. But what we were talking about is, and I don't know if I'm right or wrong here because I'm not a legal professional, but I was saying, and my opinion is, if she really wasn't sure or had no idea what decision she was going to make, would she not ask for all the emails and just read through the whole chain? That's what we basically said. So
That's a good point.
We think, and the next tweet's going to tell you, that if she's probably got a decision already in her head. Now, she's got a decision already in her head, but she's going to still comply with what they were talking about in court, just to give them the benefit of the doubt and see what else is going on. Because if she's not made a decision, then why would she not take all the emails?
I'd be surprised if she hasn't got a decision in her head.
Yeah. So
Even if she's not told anyone, I'm pretty sure, like,
she'll be leaning one way at
sometimes
least.
you can read something
Yeah.
and you're instantly going to make a judgment call on it. She's obviously read those 10 emails and saw something fishy in there.
Yeah.
And asked for 10 more.
It's going to be weird what they send next. So that's the next tab, I think.
So obviously, this is by June 16th, which is obviously today. Can she ask for an additional emails? Or
Yeah, because she can do whatever, because she's not saying that after those 10 she's going to give a decision.
I'm sure a lot of people are thinking now, like, why doesn't she ask for all 58?
Just because she can't be asked to read them. Because she's like...
she already knows. Obviously, our speculation is
our speculation she already knows, but what you got to think is, and this is what people forget, is that she's not just litigating this trial. She's doing like 100 different trials at the same time. So, as much as this is really important to us, she's doing like not 100 because that's not realistic, but she's doing more than one case at once.
Of course. So. And obviously, Fred Rispoli, tweeted this in order. We don't know what this HRG. So if anyone knows, comment what it is.
Let us know what
we're not
HRG
too sure. But basically, he's kind of saying that obviously today's the deadline, but he says we'll find a decision or get a decision on these emails.
Yeah, like this sentence as well.
Yeah, as SEC cherry pick the first 10 docs, it has less options for the next 10. So they've obviously the first 10 they've looked at it and said, okay, which 10 emails are going to hurt us the least. And they've given her 10 emails, so now George is almost back him in a corner a bit and saying, okay, give us an additional 10.
Yeah.
So they're obviously going to go through the same process in terms of picking 10 documents which are going to hurt the SEC the least, but as they ask for more, the more they're going to get.
They've got less to pick from, innit?
Exactly, so they're kind of saying that a decision on this is going to be made by June 23rd, which is obviously in 5 days, which would be awesome. Judge said SEC may submit.
So they're basically saying, like, in the comments there, you'll see here, it says, this is just, I've seen this from a few people. The judge said the SEC may submit an additional 10 documents. I wonder why she gave them the option. Because people are saying that, like, the judge has said that they wanted the judge to look at 10 more, and then she's saying you can, if you want, submit another 10 and I'll read them. And then they're saying that the SEC might not even submit another 10.
Again, so that kind of shows that she's kind of made a decision up in terms of where she's going to release.
It's moving kind of mad, brother!
It's moving mad, it's moving quick. The ball's kind of getting rolling again. Then it stops and it's getting rolling again.
I'm flipping scared.
I am very excited. I just want to see him because, like,
I also like to see Gary Gensler just cringe.
Which he will be.
Yeah.
He already had.
We saw that. We talked about that little meeting. We haven't got it up as a tab, but, like, he's changed his tune a bit the last few weeks, hasn't he? From being an arrogant guy to being like, oh, sorry, please.
Pressure's piling in on it. That's what we've been saying. You can go back into all of our episodes of this podcast and you will see us pull up news articles about the SEC being under pressure.
Yep.
Whether staff leaving, external authorities coming in and kind of trying to regulate the SEC a bit because of their, like, whatever they've been doing behind the scenes. Obviously, looks a bit shady from anyone's perspective. And obviously that opinion is obviously shared by other people.
Yep.
If they're coming after him, and you can, in that clip that Will's referring to, I think we did retweet it.
Yep.
He looks a bit more unsure in himself.
Yeah, he's a bit more humble, isn't he? Like, he's been arrogant before, and now he's a bit like, if that's okay, sort of thing, rather than saying this is how it is.
So it's still interesting to see.
Because you've got to remember, he wants to keep his job, and when these midterm elections happen, if the House changes, they can vote him out.
Yeah, that's obviously a big possibility in terms of happening.
Especially if, like, if the House specifically goes, oh yeah, well, actually, crypto could be a really good thing for our economy, and you've been stifling it. Then what's he going to say?
Straight out the door.
Yeah,
he's straight out the door. So yeah, maybe he's trying to backtrack a bit and kind of maybe is this the way they pivot into becoming crypto friendly? Probably not. Probably not short term, but you can start to see it.
Yeah, you can.
But yeah. Anyway, more Ripple news, obviously.
Send you.
And it's another good call from Will, because obviously Will's been shouting about Brazil UK, India for a lot of time now. Obviously, we are more than aware that Ripple work with these countries anyway. But they've expanded again. Fast, seamless, cost-effective payments from Brazil to UK and Europe, powered by Ripple and Modular.
Yep.
It's connecting everyone. We said it on our other weeks. The more corridors that they're opening up, the more, obviously, maybe it's not a corridor, but the more doors are opening up in terms of getting everything used on the Ripple net.
I'm going to say this. I'm going to come out with this statement right now. Is in the future,
right?
People are going to look back on these podcasts and be like, those kids were so ahead of their time.
Like they knew.
They knew. Because we know. Like, I feel like I know. Like, I dig into this so much.
I was going to say when you read into something so much, like, obviously, Will reads into it, as you can tell, a lot more than I do. But, because obviously he does TikToks. But, a lot of people just kind of read an article and then that's it. They won't actually dig into what it actually means, what else they're working on. Mm-hmm. Whereas when you research something, you kind of go into it. You go into the next story in terms of what it means and connect them all up. That's what it's all about.
Yeah.
Because that's how you get ahead of investments. That's how you make money into. That's
how you give yourself the edge. It doesn't mean that it's for sure. It doesn't mean you're going to be right, but it's
one hell of an educated guess.
Because as soon as I start seeing like a name mentioned over and over again, like Modular, for example, or like if I see they're based in Sao Paulo and I'm like, okay, Sao Paulo's in Brazil, and then I see somewhere else that's based in Sao Paulo and then they're related to Ripple, and I'm like, okay,
the dots.
Yeah, exactly. And what we talked about last week with India, and we talked about Bhutan, and then I did a deep dive into India, and it shows that like at least 2 of their 3 top commercial banks are related to Ripple and XRP, and I already know that one of Ripple's original plans was to airdrop XRP to people in India, because I watched a David Schwartz interview back in like 2017 or 2018, and all these things, like, even though they're not dead certs, nothing's a dead cert, nothing's a cert until you see it, they do start to put like a puzzle together in your head, and that's why I do feel like I'm a bit crazy sometimes, and I probably whine Pav up senseless about it, because it's all I talk about, but I honestly believe in all the things that I say because I just read about them all the time.
It's not like you're just cause I don't know whether people think this or not, but obviously if you invest in something, you're obviously going to want to hear the positive news.
Yeah.
But like when you honestly do so much in-depth research into it, no one can tell you otherwise, because you've got all these facts, you've got all the partnerships that they've going. You can kind of see the direction that they're going in, even from if you compare it from this year to last year in terms of how much they've invested in the ODL or how many more corridors have opened up. It's clear to see. The data's out there for everyone to read into. It's just whether you want to look into it, whether you wanted to read more into it. That's what it's all about.
25% of XRP transactions are now at ODL. Did you know that?
I did not know.
That's pretty cool, though.
See, this is what I'm talking about.
Yeah.
There's always something new, especially with Ripple.
Yeah.
Obviously, we're going to be biased. Everyone knows on the YouTube channel we're slightly biased towards favouring Ripple, but it's just...
It's what it is,
bro. It literally is what it is. Like,
I'm biased because...
It's not like we're making this up. It's not saying, Ripple are doing this, Ripple are doing that. We're making it up. There's articles, they're coming out and saying, look, we've got a partnership. It's true, it's facts, so...
And, like, it's not like I'm saying to everyone, go out there and buy XRP. Like, I've never told anyone to do that. It's like, I'm giving you a presentation on what I think.
Yeah.
You take that and put that into your basket of information that you've had from everybody else, and you look through what everybody else has given you factually, not just about their opinions, and then make your own decision from there.
That's what it's about.
That is what it's about as any investor. And I know that a lot of people don't have the time to do this full time, and that's why I'm blessed to be in this position to do that. But I'm not saying you have to listen to what I'm saying. I'm just saying take it into consideration.
Yeah, definitely.
That's all. And then last bit's a bit of TA. Bitcoin's dropping through the floor.
Yeah, so we've got the Bitcoin the weekly here because we wanted to highlight the fact that it's below the 200. This is the EMA.
This is the EMA, but the SMA was a better one.
SMA, yes. I think, so obviously the EMA is 200 at 26, but the MA is at, I think it was at 22 or 20, just going into 23. So regardless on both, whether you're using EMAs or SMAs, it's dropping below the 200, which is done before on the SMA as well, and it's done before.
Not at a weekly close.
It's not closed below it, but we've seen wicks, so we could do with a nice bit of recovery at the end of this week, otherwise it could spell a bit more fear.
Yeah, but I think that particular TA is only on the SMA, and that's at 22 right now.
Yeah, 22. So it's not too far from it. Obviously, we're 7% down today, which isn't great. Everything seems to continue to bleed.
Oh yeah,
but this is one thing I did want to say as well.
But you can talk about everything.
Obviously, this is Will's charts anyway, but obviously everyone knows about this monthly cup and handle, or this is on the weekly, but you can see it on the monthlies or whatever. You can see this massive cup and handle which has been in play. But what I like about this chart is obviously we're in this downwards trend right here. in this downward channel. We've got this nice little support line. We've bounced off it nicely. And if you have been paying attention to the charts over the past week, there's been days where Bitcoin's gone. We normally see, when Bitcoin goes down, we normally see XRP get hit by an extra like few percents on the downside. But now it's flipped around a bit.
Yeah, the dominance and like XRP2, we'll get these charts open.
Yeah,
I'll put it on the daily.
I'm sure you guys might have heard a bit of TA floating around in terms of like Bitcoin dominance or the Bitcoin and Ethereum.
So that's Bitcoin, XRP. It's having a bit of a breakout out of this downward trend, and it is struggling to break through the top of that, but it looks like it has had that close above. And then this is the big one, bro. Look at that. That's XRP ETH. That's quite a big breakout so far. Like, obviously we've not broke out this particular trend, but we have broke the recent highs.
This is what I'm saying. If you look at the chart as well, which you added it to your watch this. I don't know. You hope I'll find it anyway.
Which one are you looking for?
Market cap excluding Bitcoin and Ethereum.
Yeah, I've got that.
It's not showing anything special here, but it's something I'm keeping my eye on because it's not a new narrative, because you can see it matches that high back in 2018.
So this is total 3 if you want to find it on market cap.
Total 3, but it's a lot of things. People are talking about this a lot recently because they're not. Well, I'm going to say it because I do think it. Like, we've not had an alt season.
No. And this is what we need to get onto now anyway.
I'm not saying there's going to be an alt season right now, because when the Fed have been so hawkish, it's hard for anything to move up. Okay, I'm not saying that, but when we start seeing a pivot in this cycle, we've not had an alt season. The dominance charts show that both Bitcoin and the total free show that we've not seen a big jump in alts, and people are so fixated on the fact that it's the same as last time. Okay, if it's the same as last time, then where's the alt season?
Yeah.
Are we on this extended cycle? Is the alt season yet to come? It's a question in my head, which is it's a thought that's been growing week on week.
Yeah.
And now we're starting to see content creators starting to mention it.
Yeah, and I think that this big point we talked about at the start, and it's like people are super fast to jump on and say, "Oh yeah, you can't say it's different. You can't say this time it's different." Well, if you can't say this time it's different, we should have an alt season.
This is what I mean.
So that's one conflicting information. If you look at a lot of the charts, like we've talked about at the start with the Bitcoin Fear and Greed, we've talked about how the Fear and Greed index is at 7, been at 7 for 2 days now. In these clusters, these are the previous lows of bear markets. This is 2018. This is when the 2020 C19 crash, and this is in June / just after May when we crashed in 2021. So now we're in 2022 and we're clustering and even putting in some lower lows. So if you look at that, if you look at then on Bitcoin, if we look on the day, if the weekly is what I want to look at, when my RSI is gone, but it's gone. Yeah, right, my RSI is gone, but let me just add it in quickly. There we go. RSI's in the dirt. Look, on the daily, on the weekly, sorry, this is the lowest print it's ever had, or close to. Same for XRP, lowest print we've ever had on the weekly. That coupled it with the Fear and Greed, these things do indicate bottoms or in and around when bottoms come in. But because of monetary policy, wider economic conditions, like we talked about at the start, people automatically presume crypto can't perform. But if you're saying that, like, we just data specific, so things can't be different to last time, well, we have no data for last time, so I don't know how you can make that presumption. And that's kind of what we tried to talk about at the start and said we'd leave it to the end. But like, we both think that you can't be certain on your direction right now.
No.
And so if you're an investor, what does that mean to you? So it's fine for us to say that it's our opinion.
Yeah.
If you're looking, if you've got, let's say you've got £10,000 and you've got £3,000 in the market at the minute and 7,000 on the side, what do you do?
Well,
just your personal opinion.
My personal opinion would be what I've been saying every week. Like, I personally have been in a position where I've come into a bit more cash just through work and stuff like that, and I've bought at these prices because there's as much, like I said earlier on, there's as much information out there which suggests that this is or we're close to a very, very close to a bottom.
Yep.
Whether it goes down to like 5%, 10% or whatever. As much as information that there is for the 12k Bitcoin.
Yeah.
Regardless, I've still bought in at this price, and I've still got price targets where if Bitcoin does drop down and the market comes down with it, I will buy more at that price. Because worst comes to worst, like I said, if we do find a bottom at the end of this year, the top's already been marked anyway. So then you can just always see in terms of when the next cycle is going to start, worst case scenario back in the next year, start of maybe 2024. That I'm happy to wait for that, because you just need to be investing. We say it every week. Invest what you can afford to sit in your portfolio for potentially worst case scenario, forever. Don't be investing funds you need on a day-to-day basis. But that's the advice I would give to anyone who's either got positions already in crypto or looking to get involved in the space. Yeah,
and the point is from that, is that we don't know, as content creators, no one, even macro investors, the best in the world, are arguing about what's going to happen in the global macro environment. So crypto is a completely different breed to that. It's a different asset that we don't have information for when we've gone through periods of monetary tightening. We don't have information for it. It's easy to jump on the fact that it may be or correlate to downwards movement in crypto because it's acting like a risk-on asset, but we can't presume that for sure. It's just been correlated recently. Why can that not uncorrelate? It's a completely new asset class and it's completely speculation based at the minute. At some point that may or may not change. That then may fix or not fix some aspects, if not a lot of aspects of the economy, and may be one of the factors that brings us out of this. If we can do things like free up capital, like Nostro Vostro accounts, XRP's trying to do, even just enable cross-border payments, give people an alternative way to invest money that could create yield for their capital. I don't see why this space can't be used as a way to get out of this monetary problem that we're in.
No, I agree. I mean, what Alenda was saying is don't pick a side.
Yeah.
Whether you're pro-crypto or anti-crypto, whether you're 12k Bitcoin or current bottom of 19k or current bottom of we've already set a low, don't pick a side. It's just the wrong game to play. Invest what you can, be smart.
Yeah, everyone.
It's the best advice you can give.
That's a great way to say it at the end, to be fair. But everyone who's screaming in your face that we're going lower and with complete conviction has not taken into consideration everything in the market, because it's not possible to give you complete conviction right now.
And what I'll say is, if you're sitting there and you're watching content creators, obviously you tend to go back to the same content creators. And obviously whatever you search on YouTube, you kind of get fed that information anyway. If you're getting fed that information where it's 100% going down, take it with a pinch of salt, because I'm not saying it's not going to go down there. I am prepared, if we do go down there, to deploy more capital. So I guess you can kind of say I'm kind of not wanting it to go down there, but thinking it might potentially go down there. But it's in my head.
Yeah, of course. And it's in mine too.
Don't be shy of the idea. Don't be scared of the idea it's going to go down to 12k. If it scares you that much, you shouldn't be investing.
You've probably got
too much exposure in the market, and that's just being. I'm not saying sell at a loss now, but I guess that's completely up to you. I'm not a financial advisor, but my mindset right now, be 100% playing with you, is that whether we're close to a bottom now, 19. I think I've got a target on my graphs. I think it's like 19,200. But if it does go down, I've also got buy orders in at lower prices.
Yeah.
But
let me just get this clear. You're not actually buying Bitcoin, are you? We use Bitcoin as our indicator for the wider market, but we're not actually buying Bitcoin personally.
I've got zero Bitcoin. I've actually never bought Bitcoin. I'm not against Bitcoin.
No, me neither.
I'm not one of those people who pick a team and absolutely hate the other coins, because I like I said to you, we've already thought into our future investments, and we've mentioned Bitcoin as a potential future investment.
We're into XRP because of risk to reward as well as our research.
That's the only reason.
And when we start to cash out and take profits, which we will do at some point, and we'll let you know, we've been transparent. We will be transparent about that. We may cash some of our profits out into Bitcoin.
100%.
Yeah,
100%. I'm not against any crypto out there. I do tend to stick to like the bigger ones because they're a bit more.
I always say don't go outside the top 100.
Yeah,
you don't need to.
I wouldn't really, because there's enough. I know, but the thing is, people are just greedy. Like
they want a lottery ticket, don't they?
They want those 1,000 to 10,000%. Whereas, like, if you're actually really clever and you know the direction where the market's going, which we do know, like crypto, blockchain in general, is going to be mass adopted one day, because it just solves so many problems that we face in our financial and non-financial industries worldwide. If you truly do believe in it, you'd be investing at these prices.
Yeah,
okay?
I agree.
If you're one of those, the only people who aren't investing right now are the people who are trying to find the bottom, and those same people are the greedy ones who.
And a lot of the people that you read or listen to, a lot of what they say, they don't actually do themselves. And like, I don't want to call anyone out, but like, there are a lot of people in this space, especially content creation wise, that just say things for views, because that's what people want to see. And they aren't necessarily following what they're talking about.
You know, and then
And they have a lot less exposure in the
I have
market,
seen
you
that
might
a lot.
think.
As a non-content creator, I guess I can kind of relate to the viewers out there. It is hard to distinguish the difference between a content creator who's actually genuine, like Crypto Insight UK, or content creator who's just saying something because it's a bit controversial and they know it's going to get views. So it's hard to kind of sift through that kind of information, which is why we always say you need to be watching several influencers,
Definitely.
several YouTube channels, reading everything you can, ingesting
With
information.
opposing perspectives as well. I watch Bitcoin maximalists, I watch everything, and then I give my opinion. That's why I think that I would like to think that my content's good, because I'm only giving you what I personally think. I'm not going to tell you anything that I don't think. I'm not going to say, oh, this, and this. I give you my personal opinion, and my personal opinion is based on the research that I've done and looking at people who think the complete opposite of me.
Yeah. I think that's the best thing I've learned in this bear market, I think. One thing, because obviously I've still not been in the space for about 2 years or so. That's the one thing I can kind of take out of this bear market, which is going to help me in the future. So it's all a learning process.
Yes.
You're going to make mistakes.
Yeah,
you are going to lose money. But in the long run, if you do enough research, you spend enough time, you really do believe in what you're investing in, you will come out of the green. Which I know I will be. So
yeah, and I think we finish it there.
I think we do finish
Good
it.
podcast.
Spot on, guys.
Good work, bro.
See you on week...
Another one. On week 11 or 12.
Or 13.
Or
Or
13.
14.
Wherever we are.